Many have applauded this step of the Apex Bank as it is expected to help the Naira appreciate, lower import-induced inflation, and protect foreign reserves as the shortage of forex often leaves the local currency and the economy unprotected from possible fluctuations of oil prices. Barely 3 weeks into the new forex policy, there are already attempts to circumvent it with reports of fraudulent activities by bank customers who pretend they need forex, approach banks with airline tickets, and go back to cancel tickets after they have been given forex. This is seen as tricks by the bureau de change operators truncate the new forex policy and remain in business. However, the CBN has warned that those who defraud the system will be punished with their bank accounts blocked and the banks flouting the rules will be sanctioned. Also, the Nigeria Interbank Settlement System is said to be working on an app that will enable the digitization of the process. How will the CBN enforce the new forex policy, and what role is expected of key players to make the policy work? Guests on NTA's Good Morning Nigeria will discuss these and related issues shortly.
Well, you're still watching Good Morning Nigeria. That was our backgrounder from Oyeyemi Ajayi there. And of course, to begin our conversation this morning first, I would like to welcome here in the studio Professor Ken Ife, and economic policy analyst. You're welcome to Good Morning Nigeria, Prof.
Thank you for having me.
Good
morning, Nigerians.
All right, and joining us from our Benin studio is Professor Mike Obadan, Professor of Economics and member CBN Monetary Policy Committee. Prof, you're welcome again to Good Morning Nigeria, as always. And from the United Kingdom via Zoom is Dr. Bayo Olubami, President, Chairman of Council of Chartered Institute of Bankers of Nigeria. We thank you for joining us, Prof.
Thank you very much.
And from our Kaduna studio, we're also being joined by Shoaib Idris. Shoaib Idris is a financial analyst and former banker. Good morning and welcome to the program.
Good morning and good morning, Nigerians. Thank you for having me.
All right, gentlemen, let's get started and see what justice we can make to this very topic this morning, talking about update on CBN Forex policy. Just about 3 weeks ago, the CBN came hard and tough on bureau de change operators, and they really said it's not going to sell to them anymore foreign exchange for them to really sell to consumers. And that one has not really, didn't really go down well with BDCs or BDC operators and some other Nigerians. But all the same, the CBN said, you know, the commercial banks, you know, can now do the job as usual, and then they should open up, you know, sell points at all over the place so that people can access it as usual. Now, let's look at the update. Prof, what's your assessment of this policy or the implementation of this policy 3 weeks after? What's your take? What did you see?
Anyway, first of all, I have to say that there are two core functions or two core mandates of central bank. One is to maintain financial system stability, which is not in question at the moment. The other one is to maintain price stability. And that function is being affected by what happened in the BDC. Is forex price, inflation, all those things that affect price is the core function. So what happened is that we are well within the mandate of the CBN to take whatever action that is necessary to protect its primary mandate. We're not talking about domestic system intervention, which is a secondary mandate. And I can't actually, so what was going on in the BDC touched very raw nerves. And I wasn't scared to see that the CBN governor was very angry and visibly shaken. because they touch the raw nerves of their core mandate. And I have to say this, that I'm not aware, anybody can correct me if I'm wrong, I'm not aware that there is any multilateral trade agreement or plurilateral or bilateral that places obligation on any central bank to fund forex activities and import and export activities. I'm not aware of any, but I must be corrected if I'm wrong. So the patience of the CBN was overstretched, and so they had to take the action that they took. But there are many more things to those we will discuss over time.
Basically, I was asking 3 weeks after the implementation.
Right. 3 weeks is still early.
It's still
because
early,
it's still early because the jury is out on two things from my perspective. Time will tell who is the better of the two evils, you know, the BDC and the commercial banks in the game that they play with our forex. That's the time will tell. And the second thing, of course, is there are much more fundamental issues here about how we deal with this problem. We need to digitize this system to make it foolproof. But if until we get to that stage, the people are saying, BDCs, go and get your own foreign exchange. Go and, you see, part of the reason why they were actually set up to do this in the first place was the failure of the commercial banks to be very, very inclusive in the disbursement of this money. So we now had to bring them in, and that third tier had a role to play, even though they're doing it so badly. But they have a role to play because with 41 million MSMEs, they were supposed to be nurtured, groomed, and in a position to build the base of our pyramid, to do it even better than the way the CBN was, the way the commercial banks were. So they have a role to play. It's all done so badly, but I hope that with the fullness of time, we will revisit how we engage them or some of them or the kind of systems that it needs a bit of time. But in the short run, which is just within 3 weeks, it is expected that the market will react. The market always reacts, and you expect the price to go up because there's still a huge gap between the forex availability and the demand demand for forex. The gap is still there, and then there's a big gap between the actual official exchange rate and what is going on in the black market. And the arbitrage opportunity still exists. And when you have arbitrage opportunity, as you would see, the people will still be tempted to do what they are doing. And the commercial banks cannot say that they are not doing the same thing that these guys are doing. They say that the CBN has more control over commercial bank activities than it has.
All right. Let's bring in at this point Professor Mike Obadan, who's also part of the committee, a member of CBN Monetary Committee. You've listened to Professor Ife here, who has made a very critical points with respect to the new monetary policy, the new forex policy of the Central Bank of Nigeria. As my colleague did ask earlier on, we are just 3 weeks into the implementation of this policy. What is your reaction as to what has been playing out since the commencement of the implementation of the new policy?
Thank you very much, Kirian. Incidentally, there was a sound problem at the beginning of the program, so I didn't really hear most of what was said. But in light of your question, I will say yes, if there had been a number of untoward developments, they are not totally unexpected. You will expect, people, stakeholders, individuals, perhaps who are desperate to react in the way we have heard. We've heard, attempts to sabotage the policy by individuals and perhaps organizations who now obtain foreign exchange, and rather than deploy it to what is supposed to be used for, then they try to, convert it into cash and perhaps use it for other things. I've heard the story that some people are getting fake documents, to the central bank, sorry, to the commercial banks, and then attempting to get, foreign exchange. That would be expected of, stakeholders that are desperate. But I think the important thing is the mechanisms that are in place to check such misbehaviors, such misconducts. And, I'm reassured that the Bankers Committee has come out publicly to condemn any such attempts to abuse the new foreign exchange direction, which adds more responsibilities, to the commercial banks or deposit money banks. And, the chief executives that spoke, last week, made it very clear that any individuals or firms found to be abusing the policy and not complying with the laid down regulations for the use of foreign exchange, will be seriously sanctioned.
Thank you so much, Professor Mike Obaden. We'll come back to the studio here, still talking to you, Professor Ken Ife. Let's look at what Professor Mike Obaden said vis-a-vis against the background of what you said. Let's look at this issue of the forex issue, the gap between the availability of forex and demand. Basically, that is why the problem is. If it's available, normally the demand is going to be not so much of a problem. But if it's scarce, the demand goes up. And in trying to meet up this very demand issue and the availability issue, some unwarranted, if I may use the word, practices come in. And that is why the CBN slammed down the BDCs and came back to the commercial banks, which of course it did much earlier. If you can remember 2016, 2020, it has been going forth and back on this issue. In your opinion, why do you think is the central bank going forth and back on this issue? Commercial banks, BDCs, commercial banks, and there we go. What's really happening?
The thing is, in the end of the day, there is more demand for forex than the forex revenue that we are getting through the central banking systems. There may be more from on the private side of things, but officially. And as long as you have that big gap, so long would the incentive be for arbitrage. And private sector respond to incentives. Even people, individuals, so they all respond to incentives. You're probably going to hear more evidence on what commercial banks are doing right now. And they are not saints. So what happened was that the BDCs went overboard. And when you hear the charges that were being reeled out by the CBN governor, you can only sympathize with CBN. Because they touch the raw nerves of that is their core mandate. So we cannot be enjoying all the interventions that they are doing in every sector of our economy and doing really well, and then you have them fail on their primary mandate. So that's why they have zero tolerance for this. But that does not mean that the commercial banks should not join hands with the MFF, Microfinance Bank, to go and source funds. I know there are issues about remittances, and you saw how the battle has been on remittances. They block there and all the action by the CBN to ensure that they stop the abuse, let people have their money, and then decide where they're going to change it, So it tells you, it's very symptomatic of how the dynamics of it. Let the commercial banks also go and source forex. I have been delivering lecture with Fidelity Bank and Lagos Business School and National NEPC, the Export Promotion Council, seeing them cultivate these small businesses and help them to export to raise revenue. Why are other banks not doing the same thing? They should all get out, go and energize that base and make sure you can help build the base of our economy to export and get money, get foreign exchange, and not jump from government banking and then TSA blocked it. They jumped into treasury bills, making the huge margin. They blocked it. They went into what do you call it, diaspora remittance, $26 billion. From there, get into the real business of banking and cultivate our economic base so that we can have prosperity. And not the banks posting huge profit and businesses are going bankrupt. And then you see all this kind of, we could do better.
Yeah, this issue of banks, indicating that they have big profits, on an annual basis. Yet, as you rightly pointed out, in the background, there's no solid business foundation, which banks are, patronizing to come up to that. Now, let's get to Kaduna, where we have Shuaib Idris, financial analyst and former banker. You've listened to Professor Sife and, of course, Professor Badon air their views on the current implementation of the new CBN policy on Forex. Let's get your own take with respect to the fact that the CBN has commenced the practicalization of this new policy. What's your take?
Once again, thank you for having me. I believe fundamentally the Central Bank of Nigeria took a wrong decision by saying we will not license additional BDCs and we will stop selling foreign exchange to Bureau de Change operators. To my mind, it is a wrong policy. It's a wrong prognosis of the problems and wrong actions. If you go to a doctor and you complain for headache or stomach ache and the doctor gives you, cough syrup, are you likely going to feel better? The answer is no. We have a fundamental lacuna in the pricing process of our dollars or foreign exchange. The moment you correct, that anomaly, every other issue of the hanky-panky that takes place in the selling, buying and selling of dollars or foreign exchange being allocated by the central bank will go away. If you have a bit of an interrogation of the various processes or periods that BDC operators have operated, first and foremost, we had a Foreign Exchange Act that used to prohibit trading of foreign exchange by anybody other than commercial banks. During the General Babangida regime and even prior to General Babangida's regime, we used to have, policemen and women running after these malams or aboki trading foreign exchange on the street of Kano or Lagos. Enter the era of the governor of Central Bank, late Abdul Qadir Ahmed, who decided to license, these guys to say, okay, let's legitimize this trade. And then we legitimized them, we began to give them license. Then came Professor Charles Soludo, who decided to say, let me begin to test the waters and make it a little easy for Nigerians to buy foreign exchange instead of having to go to a bank that may insist that you need to have an account with them before they deal with you or before they relate with you to sell foreign exchange. And then he now said, let's help Nigerians so that we make access to foreign exchange a little easy. Those of us who have children abroad, you need to pay for school fees, go to Bureau de Change. You are traveling, you need BTA, basic traveling allowance or business travel allowance, go to BTA, go to BDC. You need to go to hospital, go to BDC. The moment Charles Soludo did that and the pricing of the Naira to dollar was appropriate, were there hanky-panky, were there, malpractices associated with sale? The answer is no. Why is there malpractices today? Rent seeking. You have a situation where the street value of the dollar is about 500 naira. The central bank sells to the BDCs at 410 naira. There is, a margin of close to about 100 naira. Are the banks sent, as Professor Ken Ife has said? Certainly no. what we have succeeded in doing basically is transferring the malpractices from BDC to the banks. And it will continue, and there is no stoppage. The only way to stop this is appropriately price the dollar. Why should the Federal Republic of Nigeria subsidize my holidays if I need to go to United Kingdom on holidays? Instead of buying dollars at 510 naira, I'm going to be sold at 410 naira. Why should I be subsidized? If I choose to send my child to any part of the world to go to school, why should the Federal Republic of Nigeria subsidize me who has the opportunity to send my children to anywhere? We need to come back to the basics. The Central Bank of Nigeria needs to get its act right, appropriately price the foreign exchange. Once you do that, and I repeat, once you do that, all these malpractices will go away, and it will be better for the Central Bank of Nigeria to come back to its senses, sell these dollars at 490 naira or 95 naira to the BDCs, and allow the BDCs to sell at 500 naira or 505 naira to make the little margin they make. We have had periods where the BDCs did do well in that, and we were happy, everybody was happy. This policy will not last. If it is a mistake, Professor Charles Soludo has made that mistake to commence the sale of dollars to BDC. Yes, Ken Ife is right. There's probably no central bank of any country that sells dollars to bureau de change. They are allowed to go and source their dollars. We started this, and if we cannot continue, then we must find a reason to say we do not want to continue. But we create, problems for ourselves, and then we are not taking the appropriate actions to address such problems. And as long as the central bank will not tell itself the bitter truth, not just the BDCs, there are mind-boggling businessmen and women that are being given $1 million, $2 million, $5 million to go and sell and make, arbitrage opportunities. Why should that be? What kind of a country are we running? The earlier we come to terms with appropriate pricing of our foreign exchange, the better for all of us.
Sorry, I want him to do some clarification here. You're talking about appropriate pricing of our nation's foreign exchange. What is the mechanism for this pricing? Because I want to believe, quite frankly, that the central bank is in the know of whatever dynamics, when it comes to foreign exchange. What do you really mean by appropriate pricing, and how can CBN get it right?
You sandwich me among professors, and I'm just a toddler. Professor Mike Obadan knows much more than I know on this subject matter, and he's a member of the MPC. Professor Ken Ife knows much more than this, but basically, Karian, from a kindergarten economics, there is a process of pricing foreign exchange. Purchasing power parity is one of those theories that we price foreign exchange. Ken Ife alluded to it tangentially, demand and supply. So did Yusuf, one of the anchors, tangentially, touch along that line. Demand and supply. If there is a fundamental gap between the demand and supply, prices will not necessarily be appropriate. However, market forces are the best determinant of value of any asset. So let market forces be allowed to determine the price of dollar in Nigeria. A situation where central bank operates 2, 3, or 4 multiple exchange rates, it only breeds corruption. My heart bleeds for this country. The local government, the state government don't have as much money as they wish to have to give our populist dividends of democracy. The dollars we are earning from oil are being sold at ridiculous rates. Why wouldn't there be rent seeking? So as long as central bank continues to do this kind of lopsided arrangement of multiple exchange rate, so will these abuses continue. And what the BDCs are doing is just a minute scale of what is happening in this market. Kirian and fellow discussant, let's ask ourselves the fundamental question. On the average, every month central bank sells $450 million to BDCs. Can we really say that the Nigerians are traveling as much to buy $450 million for business travel allowance? Can we say that we have sufficient number of school children that are buying this $450,000 every month, $450 million every month to send our school children or to pay for school, for hospital? Most of these monies are being bought by whom? By a few who have stolen our money, and they are looking for where to hide this money. And we are not being fair to ourselves. Taking this business to the central bank, you are only transferring this problem, and the same bank, the same commercial banks will not be able to manage this situation. I bet you there is no way, and I repeat, there is no way other than appropriate pricing of the exchange to avoid all these malpractices.
Thank you so much, Shoaib Idris, financial analyst and the former banker indeed, of course. We appreciate your passion. Dr. Bayo Olugbemi, President Chairman of Council, Chartered Institute of Bankers of Nigeria. Please, you've heard Shoaib there speaking really with some passion about how to make or how to get out of the woods in this regard. Do you share the same passion with him? If yes, why?
Thank you very much. Yes and no. Talking about appropriate pricing, he also mentioned some ways that that you can achieve price stability in the FX. The issue of demand and supply. You see, fundamentally, a lot is wrong with our economy. And the fact that we are net importers of goods and services is a major problem. In the 70s and the 80s, when our refineries were working very well, we were net exporters of refined products. And that means we had several sources of FX, and foreign exchange was available for anyone that cared to need them, either for fees, either for export reasons and the rest. But today, we are net exporters of refined products. So the money that comes in, FX that comes in terms of crude oil, is also being filtered away, being used to fund refined fuel. So to a large extent, if we are able to fix our refinery, I'm looking at the real problems. It's not about what you use FX for. It's not just about arbitrage by the BDCs and the rest. But the fact remains that you don't have the large amount of FX that the country needs. In effect, your demand is much more than your supply. Then there will be deficit. There will be an issue of how to spread it thin. There will be an issue of hoarding. There will be an issue of people wanting FX at all costs. But if supply outstrips demand, then definitely there will be appropriate pricing. So there's no way any CBN or our CBN rather can fix the price of FX vis-a-vis the naira and dollar that will be appropriate, so to say. And I think the new policy of CBN, taking away this BDC thing, to my mind, I think it is appropriate, and that's the right thing to do. And over time, operators of BDCs have been making up, so to say, because if you bought at 410 and you are selling at 500 or thereabout, that's a kill. 90 naira over 410, that's about 20%. That is so much. So I think the banks, I believe, because of their structure, because they are well policed or monitored or inspected by CBN, I think they will do far, far better than BDCs who are not required to put in so much documentation. Like banks today, if you want to get FX for PT and whatever, you have to fill Form A. If it is goods and services, goods, you have to fill Form A. So for what we call visible and invisible imports, you have to fill forms, and there are proper and accurate and appropriate documentation, unlike the BDCs that are free for all, no documentation. So if any bank is playing games, playing pranks, it will be easy for the CBN or the people in authority to know. So I think the best thing that has been done now is what CBN has done. You can never say it's too late, but it's better late than never. For appropriate pricing that Alhaji Shoaib is talking about, I don't know how that would be possible given the fact of the structure of our FX as it is today.
Still on you, Dr. Wai, just a minute, Kieran. This is not the first time the CBN is really going back to the commercial banks to do this business. And you remember 2016 and of course 2020 when it came out with some policies against the BDCs too. But still, it's still coming back today. And the issue now is, are you confident that, or are you really sure, or are you really on the right track with the CBN by allowing the commercial banks to really have this assignment executed in spite of the fact that they've failed in some other instances when the central bank had to really take up rather that mandate again back to the BDCs and now. I mean, this back and forth, and I asked Professor Ken this question. I didn't get the right answer. I don't know.
I believe, like I said, the commercial banks are well structured and supervised by CBN. What I think is, if any of the commercial banks does anything against the rules of the game, such a commercial bank should be sanctioned. We should not paint every commercial bank with the same black brush. And I think that has been the bane of our society. When something goes wrong, get the culprit and deal with that culprit instead of blaming everybody for what one person or one organization has done wrong. So I believe with the rules and regulations or the guidelines that have been set by CBN, no commercial bank should do anything otherwise. And if they do, such a commercial bank should be singled out and punished accordingly.
All right. In fact, the question put out by my colleague is very apt with respect to the fact that it has happened in the past, where BDCs were relied upon for this for forex transactions, and this time around we are going back again to the commercial banks. And again, we are beginning to see some ploys, by some banks, that people are still getting this forex through the back. The BDCs are still getting this forex through the back doors, using the structure of the bank and whatever formats that's been put in place to enable individuals who genuinely need this forex get from the bank. Now, let's bring back Professor Mike Obadan once more. Prof, you've listened to other guests make very interesting contributions to this conversation, especially our guest in Kaduna, Shoaib Idris, who did not agree totally, with the central bank decision on this matter. He talked about appropriate pricing of foreign exchange. And of course, Dr. Bayo Olubemi did say that, look, it is not possible for one to just stand up and do appropriate pricing of foreign exchange because of other dynamics relating to the nature of Nigeria and our economy, manufacturing, importation, and what have you. How would you respond to all of these issues, that have been raised by other guests concerning this issue on ground?
Well, thank you very much. Well, Kyrian, raised. But let me say from the outset that with utmost respect, I do not agree with the two positions of our very good friend Alhaji Idris Shuaibu on the BDC policy and also the question of pricing the exchange rate. First of all, I think what needs to be clearly understood is that the central bank had given the BDCs a long rope, as it were, but the misbehavior continued. What has happened is that the BDCs had constituted some kind of sabotage to government policy, specifically monetary policy. The BDCs were set up as a quasi-official, market to support, in the accomplishment of the central bank's objectives of making foreign exchange easily available to small, users, selling foreign exchange to them $5,000 and below. And central bank, provided access to them. Let me say that at the beginning, they were not supposed to access foreign exchange, officially. But they agitated after operating, and then central bank, acceded to their request. And when foreign exchange is sold to them, they are expected, in line with monetary policy, to sell the foreign exchange to small users, end users, at a margin, approved by the bank, not to go to the black market and, collude with the operators there and be selling at those rates. They had continuously done that for a long time and given the impression that, that black market is now the major determinant of exchange rate in Nigeria, which is not. So as it were, the BDCs were no longer helping the central bank to accomplish the set objectives for which they were set up. And so they have lost the raison d'etre for them to continue to access official foreign exchange. Well, yes, he said perhaps the commercial banks might also engage in the kind of sharp practices which they had been engaged in, for which they had been sanctioned. Yes, the central bank is in a much better position to monitor and ensure compliance by the commercial banks. There are only 24 of them, or 26, and they have branches. Whereas you had nearly 6,000, bureau de change operators. So as it were, the policy decision that have been taken is the best under the present circumstances. As the implementation, evolves, whatever challenges that arise, the bank will take appropriate measures to deal with those challenges and ensure that, the commercial banks behave and that end users are not shortchanged in any way. Then secondly, the issue of appropriate pricing of the exchange rate. Let me make this point clear, that Nigeria is a country that at the moment, does not have its naira as a convertible currency. And so it is not in a position like the United States, or the European countries using euro, of France and others, whose currencies serve as domestic currency and also serve as, international currency. What does that mean? It means that Nigeria as a country, like other developing countries, must earn foreign exchange from exporting goods and services, and also by attracting capital inflows. And at this point in time, our production capacity is not responding to desired outputs. We are not producing enough. We are not exporting enough. And so foreign exchange earnings is very limited. But then the demand for foreign exchange to buy imported goods and services is very, very high. So you have a very big imbalance. We have low foreign exchange earning capacity. We have low volume of external reserves that can support the exchange rate. But at the same time, you find all kinds of requests for importation of goods and services. So like Professor Eke rightly said, the demand for foreign exchange is much higher. Let me give you some statistics. In the first half of 2021, the total outflows of foreign exchange from the country was over $17 billion. But at the same time, the total inflows from export of goods and services, capital inflows, was about $14 billion, which means that there was a net foreign exchange outflow of over $3 billion. How was that one financed? Or how would it be financed normally? By depleting the stock of external reserves. Or if that one is not done, then borrowing of foreign currencies can be done to finance the deficit. In other words, in the first half of the year, the balance of payment, overall balance of payment position was over $4 billion in deficit, which is financed by depleting the reserves and or borrowing. So Nigeria is not in a position to say, let the market, determine the exchange rate without management. And that's the reason why, yes, the Central Bank of Nigeria, determines the exchange rate through the market, but then manages it. For example, the major exchange rate in Nigeria today, which is virtually the only one, is the investors and exporters, window, foreign exchange rate. And the exchange rate in that market is determined by market forces based on prevailing market conditions. What the central bank only does, and which many other developing countries also do, is to use supply to manage the exchange rate, condition it, at this point in time. So if we say, let the market determine the exchange rate, as advocated, by Mr. Idris, without management, and which market are we then talking about? Is it the artificial, parallel market or black market, which constitutes a very microscopic segment of the totality of foreign exchange in Nigeria? That market cannot give the appropriate exchange rate for Nigeria. As a macroeconomist, there are scientific methods for determining the appropriate exchange rate, either for the nominal exchange rate or for the real, exchange rate. As of today, scientific empirical analysis show that the equilibrium exchange rate is a little above the nominal exchange rate, which operates in the I and E windows of the market. And that is because central bank continues to use supply to moderate the exchange rate. So if we allow the parallel market rate, 500 naira, or more, as the value of the naira in Nigeria, dollar in Nigeria, what will happen is very debilitating macroeconomic effects on production, manufacturing. What will be the cost? Let me say this, that even as at now, the current exchange rate of around 410 naira to the dollar has very strong pass-through effects on the domestic price level is one of the drivers of inflation in Nigeria. Yet, the central bank has a primary mandate to maintain monetary and price stability. So the point I'm making is this, that our good friend Alhaji Idris, has not taken cognizance of the very terrible macroeconomic effects of allowing the artificial parallel market rate to be the determinant of official exchange rate in Nigeria. The impact on inflation will be very difficult to imagine. The impact on manufacturing and other elements of production will also be very, very debilitating. And so, in the context of a developing country that does not earn enough foreign exchange and whose citizens have an insatiable appetite for imported goods, there will always be that demand, supply imbalance. And so, central bank has a responsibility to properly manage the exchange rate. So overall, I do not support the position that parallel market rate should be the determinant of the exchange rate in Nigeria. Neither do I support the position that, bureau d'exchange operators can behave well and then perhaps the policy action reversed. Not at all.
Thank you so much, Mike Obadan. And so many issues have been raised here. And of course, before we lose sight of the last point, let me bring in Shoaib Idris to, comment on these points he made, especially talking about the exchange rate and, of course, the importer-exporter window given, and how Nigeria as a developing country is trying to manage this through the CBN. How would you respond to this?
I think, Yusuf, we are trying to avoid the use of the word devaluation. If there is need to devalue the Naira, for heaven's sake, I think we should just swallow the bitter pills. If somebody is ill and there is need for him or her to take Nivaquine, you have to take it, you just take it and move on. Yes, the street or the black market price cannot be a determinant of our exchange rate. No two way about it. I did allude to the fact that purchasing power parity is one of those theories that we use in determination of appropriate exchange rate. Certainly, that is correct. But the point I'm trying to all of us to appreciate and to understand is central bank, in its efforts to achieve price stability, has taken certain actions. Some of those actions, they were right. Fundamentally, you cannot fault them. But the consequences of those actions have been rather a bit somewhat negative. I give you just maybe one or two. There was intervention in agriculture. Almost 800 billion naira was given as anchor borrower scheme loans. Who took this money? Before anchor borrower scheme was initiated, what was the price of a bag of rice? After 800 billion naira was purportedly put in agriculture, what is the price of a bag of rice? The point I'm trying to make is there was pumping of money into the system, which tends to somewhat distort the price stability, and then which then affects the exchange rate. Again, my elder brother and our dad, Professor Mike Obadan, sir, appreciate what we are saying. Are the commercial bankers not Nigerians? Will they not misbehave in the same way and manner the BDCs misbehave? Why did the BDCs decided to misbehave? In 2017, 2018, 2019, was Central Bank not selling FX to BDCs? Did they misbehave? Why did they started to misbehave in 2021? Let's contextualize the situation and look at periods and then ask the question. And when you want to address, an issue, let's address the cause, not the symptoms. This is where I posit my argument. I'm not necessarily in support of central bank giving Bureau de Change FX to sell. Why should we do so? Because we are probably the only country in the world doing so. We can do without it. However, if you want to address the challenges of, the issue of unwanted and awesome practices of selling and making 90 naira or 100 naira to $1, certainly selling to the commercial bank is not an issue and is not an option. I bet you, and I fundamentally will stand to be corrected. I was in the banking industry. I spent some 25, 30 years in the banking industry. I was even appointed as an independent director by the central bank for my professionalism. And it is clear that these commercial banks will do the same thing the BDCs are doing. And we will not be able to resolve the issues unless otherwise we get the pricing right.
All right. As the conversation goes on, we are going to look at the issues concerning whether the commercial banks are going to also misbehave like the BDCs did. We have all of that when we return from this short break. But before we go on the break, I want to let Shaibu Idris know that Professor Badan is not saying that the banks are holy. He is just saying that they can be controlled and properly monitored. All right. You're
watching Good Morning Nigeria, reaching from the NTA. We're this morning discussing update on the forex policy by the CBN, where it, of course, slammed on the BDCs and stopped issuing, or rather selling to them foreign exchange. Rather, commercial banks take up the mandate. So many issues have been raised, and of course, we really need to look at them briefly because we're running short of time. Let me come back to the studio and then meet Professor Kanife. Professor, the global practice has it that forex should be accessed through commercial banks and not the BDCs, and that's what the CBN is really standing on by its own policy. And you earlier mentioned, as being enunciated by some of the speakers, that there is a huge gap between the supply and demand of forex, and the commercial banks too have to really look at this issue very well. Since the money has been handed over to them now, why not even go all out to source for or expand their commercial activities, get more forex instead of having to depend on the CBN to achieve that? How would you respond to these issues in relation to trying to get the economy out of the woods in this regard, having more forex for those who really need it genuinely?
Okay, there's a quantum of $5.2 billion which CBN gives out to the BDCs within a year. But let's look at other. How do you compare that from the statistics given by Professor Bodden? About 17 billion in a 6 months period was demanded against just under 14 billion. So it could have been worse. Remember, in 2016. The demand was $4.66 billion a month. So which means in 6 months, it would have been anywhere between 25 and 30 billion. Now, there are diaspora money. It's about 26 billion, although it's coming down. That's many times more than the 5.2 billion that we were talking about. Then we also have the drying up of portfolio investment. Portfolio investment was giving us a lot more than that, but it's drying up because of COVID and other related issues. Foreign direct investment used to give us a lot more than that, but that also is drying up again because of all kinds of issues. And there is the dollarization of the economy, that politicians want to hold dollar. And again, that is exacerbated by the COVID issues. People are worried. There's security implication as well. People are worried they want to hold dollar because they don't know what will happen. And there's a lot of speculation on our forex rate. So people want to hold dollar. It's a much more stable currency in their view than holding naira. So that pressure is there. Then excess crude account. If we are currently selling crude at over $72 compared to the benchmark. So that differential should be accruing to the reserves. But I can find them because a lot of it is being burnt in importing refined products. And then, of course, you also have the subsidy issues. So there are many sources. There are many sources of this money that could have made the 5.2 billion given to BDC very, very small. So we need to look broadly at all the hemorrhage on our potential revenue source and the leakages in our economy. And at the same time, remember that all the action being taken by the CBN is to reduce the importation of a lot of these products that we can produce. And some of them are also helping to diversify the economy. That's why trillions of naira are all there to boost productivity and make sure we can export more and wider variety of things to reduce the pressure or even the gap between these two currencies. So,
all right, Prof, let's just pause you there because we're running out of time. So at this point, we should be looking at mechanisms or avenues by which the central bank can actually checkmate some of the banks that may go out of their way to, give some kind of support to racketeers who are already in their fray at the moment. So, Dr. Bayo Olubemi, there's one aspect of this conversation I'd like you to look into, and that's the issue of digitizing the process of monitoring forex operations in Nigeria. Is it a possibility?
Yes, it is. I think today, give kudos to Central Bank of Nigeria. Unlike those days that you find the banking supervision department having to go physically all the time to all the banks to inspect their books and their check records. Today, they have what they call, if I'm correct, online supervision. It's called offsite. Yeah, we have on-site and offsite. Today, in the past 1 year or so, CBN has actually not opened its offices because of COVID. Yet they are working. And they work most of the time offsite. So, in a way, the banking supervision has actually moved away from on-site to offsite. And that's the digitalization, that is online or what you call digitization. So I think CBN has all it takes. They have the system, they have the people who can be in their homes, working from home, and yet supervising the banks. So there won't be any issue as far as that is concerned.
Let's go over to Professor, Mike, and then hear his views about this. I'm just going to throw in this against the background of the need for sanctions and deterrence against, wrongdoers. Let me go through this. The new trick in the BDC now is the students, especially carriers of international passports, are now being lured to use their travel documents and fake airline tickets to obtain forex dubiously and from banks and hand them over to bureau de change operators for a commission starting from 50,000 naira. This is a show deal, and of course, so much have happened really along the line before this very slam down by the CBN. This is just one new trick now. How would you respond to this so that we can now say that there is something that can be done for wrongdoers that will serve as a deterrent for others who may want to do that?
Well, thank you very much. I think a number of things can be done, by the central bank as the monetary authority to try to minimize the kind of sharp practices, that, may arise in the course of implementing the policy. But then before going further, let me say that, some stakeholders seem not to have confidence in the commercial banks, just because Forex, previously allocated to BDCs will now go to them. That amount is about 15%. At least in the first half of this year, it was about 15% of the total foreign exchange. And the commercial banks have always dealt with foreign exchange. They deal in foreign exchange, sell to big time, stakeholders, firms, and all that. So it's not really new that they are just coming into the business of disbursing foreign exchange. And even at that, small users, they had always, also sold foreign exchange to aspects of the small user base. And so, the question, the issue raised by Alhaji Idris, to the fact that the commercial banks will always misbehave. What I will just say there is that the commercial banks have now been challenged, not just by Alhaji Idris, but some other stakeholders. So they would then need to behave. And importantly, the central bank is not going to sit by and allow sharp practices, malpractices to go on. The monetary authority will do the needful to ensure that its policies are not sabotaged by, the commercial banks. Well, having said that, the issue you raised about sharp practices, well, I think even from time there had been some, mechanisms, in place to check such malpractices. For example, in the area of education, if a student or a parent wants, foreign exchange, to pay the school fees, of a student abroad, what is in vogue and what should be emphasized the more now is that the invoices will be brought, and when approval is given to buy the foreign exchange, the commercial bank will transfer it directly to the school abroad, not to the student or the parent and so on. The same, consideration can be had for even medical expenses and all that. For travel, you say you are traveling and then you go and buy fake tickets and all that. There should be a mechanism, now that we know that some people don't behave well, mechanism to make sure that they bring boarding passes, to show after they would have undergone the trip. So invariably, I can assure you and Nigerians that the bank will definitely do the needful. We'll put in place a number of, measures to ensure that whatever sharp practices, that are being perpetrated or contemplated can be appropriately dealt with.
All right, Prof. We simply we hope so with you as well that what Nanabo raised is just a part of it. Another aspect of it is one that those who are racketeers who genuinely, or get airline tickets to obtain forex, get that done, but later, cancel the tickets after they had been given forex. That's also another trend. There are so many ways these racketeers approach it, but perhaps we don't have time to go into that now. So let's bring in Shoaibu Idris to give us his brief closing thoughts on that. And how can we curb the excesses of commercial banks who may go out of their way to do the wrong aspect of this approach?
Kieran, I'm still back to the same point. The issue is appropriate and realistic pricing of the exchange rate. That is the solution. And there is no any other, word to call a spade other than by its name. Central Bank, yes, it's doing well. It's done reasonably well. But how much has Central Bank been able to manage even the export proceed? People export commodities, sesame seeds, ginger, cocoa, and what have you. Central Bank has been on the neck of these exporters to even bring back the funds. How much more of managing huge document. It is not about 25, 27 banks. It is about the quantum of paperwork needed to be scrutinized to say, I need to check a ticket, I need to check visa, I need to check passport. Yes, technology can help, but technology has limitation. What is that limitation? If I want to verify ticket, then I must have my system interfacing with all the airline systems so that I can easily use the technology to check the validity of a ticket. If I need to check the validity of a visa, my system has to work with, say, a British system or the US system to be able to verify the visa. Technology in this area may not be able to be a helper. The major issue is realistic pricing, and as long as we don't achieve that, we will continue to have challenges, Kirian. Yes, I wish Nigeria very well. I am a banker. I'm proud to be one anytime, any day, and I'm not chastising my fellow professional colleagues, but then we are Nigerians, we are human beings, and it is not even about Nigerianness. It is about human nature. You have an opportunity to make 100 naira, and then you say, so I'm a cent. I'm not going to make 100 naira. I would rather make 5 naira or 10 naira. Come on.
Well, thank you so very much, Shaibu Idris. On that note, we really want to thank our guests. Time is not really on our side because there are so many issues coming up at this moment, but all the same, we've got to just call it quits here. Maybe tomorrow is going to be another day, maybe sometime. And we thank you so very much, Professor Ken Ife, an economic policy analyst, for being part of the discussion this morning.
Thank you.
We also have to thank Professor Maya Kobadan, Professor of Economics and member CBN Monetary Policy Committee. Thank you so much, Prof. Dr. Bayo Olugbemi, President, Chairman of Council, the Chartered Institute of Bankers of Nigeria. It's our pleasure to be part of this program this morning. And same appreciation goes to Shaibu Idris, a financial analyst and a former banker. It's been our pleasure you've been with us this morning on Good Morning Nigeria. Hope to see you next time. And